everyone, welcome back to the channel. If you work in the Luxembourg fund industry, whether in fund accounting, audit, or asset management, NAV is something you deal with constantly. But even though the formula looks simple, the reality behind NAV calculation is much more complex. So today I'm going to break it down in a practical way how NAV is calculated, how valuation works in Luxembourg, and where things usually go wrong. Start with NAV stands for net asset value. At its core, it's simply total assets minus total liabilities. And then to get to NAV per share, we divide that number, which we have received for NAV, by the number of shares outstanding. So mathematically, it's very straightforward. But in practice, the challenge is not the formula, it's how you value the assets and liabilities correctly. That's where experience and regulation come in. Luxembourg funds can hold a wide range of assets. For UCITS, you'll typically see listed securities and bonds. For alternative funds like SIFs or RIFs, you might see private equity, real estate, structured products, derivatives, much more complex instruments. You need to note also that each asset class has its own valuation rules. So for example, you cannot use the valuation methodology of real estate for private equity assets. So each asset class has its own valuation rule. Okay. One very important point is that valuation in Luxembourg is not arbitrary. The primary document that governs valuation is the fund's prospectus. You always have to start here. Then we look at the applicable accounting framework, whether we are using Lux GAAP or IFRS. And of course, the CSSF regulation and the AIFMD and UCITS directives also. So when you are calculating NAV, you're not just doing the math, you're applying the regulatory judgment. For listed securities, things are usually more straightforward. We use the last available official closing price on the valuation date. But what happens if markets are volatile or if trading is suspended? In those cases, fair value adjustments may be required. And this is where internal valuation committees or pricing policies become very important. Now, this is where things become more interesting. Illiquid assets. Private equity, real estate, infrastructure, these are not traded daily. So we rely on models. Discounted cash flow models, comparable multiples, or independent valuation reports. This introduces estimation uncertainty, and that's why these assets receive a lot of scrutiny from auditors and regulators. Moving on with foreign exchange impact on NAV. Luxembourg funds are very international, so if your fund currency is euro, but you hold USD or GBP assets, those need to be converted at the closing exchange rate. Any movement in FX rates create unrealized gains or unrealized losses, and those directly impact NAV. Sometimes FX volatility alone can significantly move your NAV. Liabilities impacting NAV. People often focus only on assets, but liabilities are just as important. You must accrue management fees daily. Performance fees, especially in hedge funds, can have a major impact too. Audit fees, administration fees, custody fees, all must be properly accrued. Missing accruals is one of the most common NAV errors. We are going to look at a very practical, easy example. Here you have the assets given. Let me just change the color. So you have, for example, all the assets, securities, cash, receivables, which brings the total assets to 10.6 million. And you have one liability, which is fees payable of 200,000. Okay, so you're given the total assets, you're given the total liabilities. You can calculate your NAV. Okay? NAV is equal to total assets minus total liabilities. Okay, total assets is 10.6 million euros minus total liabilities of 200,000 euros. This gives us a NAV of 10.4 million euros. Okay, this is the NAV. Right. Now let's assume that we have 1 million outstanding shares. Okay, you have the fund and investors have 1 million outstanding shares, have invested in 1 million shares. Okay, so what is your NAV per share? NAV per share will be 10.4 million divided by 1 million. It gives you 10 euros 40 cents. 10 euros 40 cents per share. Okay, now when do you calculate the NAV per share? Usually your client would ask you for NAV per share when they have requested a monthly, quarterly, or fortnightly NAV pack. it depends on, the frequency you provide the NAV back. So they might request the calculation of the NAV per share, or every time you send out investor report or capital account statements to investors, they do not only focus on their NAV, they also want to know the NAV per share. They want to know what is the value of one share per the NAV of the fund. So this is very important calculation to give to investors on a quarterly or monthly basis whenever they require. Okay, so here very simply we have calculated the NAV. Now, from where do you get the information? TA, TL, etc. These come from the balance sheet. So in any time you have a balance sheet, it's going to be very easy to calculate the NAV. Just take the assets minus the total liabilities. Now, common NAV errors. In practice, NAV errors usually come from incorrect pricing feeds. Okay, the valuation goes wrong. Missing expense accruals. We have missed out on management fees accrual for one quarter. Of course, the NAV will be incorrect. Wrong FX rates. Foreign exchange has wrongly been accounted for. Incorrect share counts. Instead of 1 million shares, you have accounted for 100,000 of outstanding shares. So obviously this will go wrong. Or corporate actions not processed properly, so just minor expenses or revenues which has gone wrong. So even small operational mistakes can lead to material NAV restatements, and this can damage the reputation. So anytime you see there's a NAV error, you need to communicate it as soon as possible to the investors, and then update the investor reporting, the capital account statements, and resend them out to your investors, because you don't want to continue with an incorrect NAV or incorrect investor report. The role of oversight and audit in Luxembourg. So one strength of Luxembourg is its strong control environment. For example, the fund administrator will calculate the NAV. Of course, after calculating, the client will review it, and there is going to be a lot of back and forth between the fund administrator and client until they have finalized the NAV. Then the depository will oversee the NAV. They will have look through as well, because they need to assess they need to look at the investment, the valuation, and all that. So they have a really look through overview of the NAV pack. Then the external auditors review them on an annual basis. So when there will be audit of that fund, the external auditors will review the NAV pack itself. And then once this is done, the CSSF supervises the overall framework, and also the audited report of the fund. This needs to be submitted by the client to the CSSF. So eventually, everything that you have been doing over a year will have to be submitted to the CSSF. So as you can imagine, there are multiple layers of control in Luxembourg, which is essential for investor protection. So what you should remember is that the formula is very simple, but valuation requires judgment. The prospectus is always your starting point. Illiquid assets increase complexity, and strong internal controls are critical. NAV calculation also, it is both technical and regulatory, so you do not just follow what is written in your prospectus, which is, you get the technical point of view from your prospectus, but it is also regulatory, so you need to always be sure that you are aligned to UCITS directive, AIFMD directive, because these keep changing, they keep evolving, they keep updating few criteria, few articles, and everything needs to be reflected in your NAV calculation. Okay, so we come to an end of this video, and now if you found this useful, please let me know in the comments, and if you work in the Luxembourg fund industry, let me know which topic you would like me to cover next. I can cover things like performance fees, IFRS 13, Lux GAAP versus IFRS, audit findings, and so on. So feel free to reach out. And don't forget to subscribe. I'll be sharing more practical insights specifically tailored to the Luxembourg fund market. Thank you.